5% of IRA accounts are self-directed. Most are standard IRAs just held through a brokerage such as Charles Schwab. And while self-directed IRAs are not for everyone, I suspect that the main reason more people don't use them is because they've either never heard of them or they don't understand them. So, to explain the pros and cons of self-directed IRAs, today we are bringing in Aaron Fragnito. He's an experienced real estate investor and the founder of People's Capital Group, which specializes in New Jersey multifamily real estate. Aaron, welcome to the show.
Thanks for having me, Brian. Glad to be here.
Oh, I'm so glad you're with us today. So let's start at the really basic level. What is a self-directed IRA?
Sure. So essentially, the IRS allows you to work with an IRA custodian, which is a middleman, who will hold your IRA and allow you to invest in less common alternative investments, right? Like real estate and so on. And so it's a really interesting process. Less than 5% of IRAs are self-directed. Most people don't know about this, but it's a pretty easy process. It's pretty affordable, and we'll dig into it in the next few minutes.
Yeah, so let's dig right into what can you hold in a self-directed IRA and what can you not hold in a self-directed IRA by law?
Sure. So most people self-direct their IRA and invest in alternative assets like real estate. That's a very common one. Or you can invest in private companies, private equities as well, startup companies, something like that. You can also invest in mostly anything. Let's focus on the things you can't invest in.
Yeah, that's a shorter
Collectibles.
list.
Yeah, it's a shorter list. Exactly. So collectibles like art, antiques, gems, coins, alcoholic beverages,
Yeah, so fine
certain
wines.
precious
Yeah,
metals. I think you can invest in gold. You cannot invest in life insurance policies. Essentially, anything that's considered a collectible or very speculative under the IRS regulations. You also cannot invest in S corporations. Okay. You can invest in cryptocurrency, though. That's the popular one as well these days.
of course.
Lots of options to self-direct your IRA into.
Yeah, and one thing I want to touch on there is my understanding is that, well, yes, of course, you can invest in real estate in a self-directed IRA, and that's what actually the majority of self-directed IRA account holders do with their
Mhm.
SDIRA. You cannot own any real estate that benefits you personally. So you can't own a
Mhm.
primary residence, and that
Mhm.
includes house hacking. And
Yeah.
I believe it's if your immediate children or your immediate parents are living in the property, you can't invest in
Right.
that, or you can't hold that either, right? So
Yes, prohibited people are more of the horizontal family line, right? So you cannot give your son a loan to go to college or lend money to your parents to buy their home. You can't live in the property, right? You can't have a vacation property and take your family there to the beach every summer. That's against the rules as well. Your IRA custodian is going to guide you in this process. That's essentially why you hire them, right? They're not going to tell you if it's a good investment or not. They are going to tell you if it breaks the IRS rules. And that's exactly what you're paying them to do. But as long as you follow those rules, you invest in an income property that you're not living in, but you invest in your brother's business or something like that's fine. You can do that, but you can't invest in your son's business or your dad's business. That would be prohibited. Mhm.
yeah, and so you mentioned that this is what you pay them for, is to tell you what you can and can't do and keep you out of hot water with the IRS. So how much do you pay them? What are the typical fees for a self-directed IRA?
Sure. So fees differ with all IRA custodians, but they essentially all do the same thing. And you'll want to shop around a little bit. There's dozens of them out there. To start an account, it generally ranges from $50 to say $300. Okay. Then you also have annual fees. Some IRA custodians, they usually offer a couple options. It can be a flat fee, anywhere from $250 to $500 a year to hold your IRA there, or it can be based on the amount of capital you have invested with them. So obviously, the amount of capital you're invested in holding there are all going to play a role in the option you choose for that IRA custodian. There's also other fees you want to watch out for: cutting checks or distributing money or sending wires, or there's a number of different services that they can hit you on. So you want to watch for those hidden fees. And usually, any IRA custodian is going to send you a whole fee sheet that's going to be very transparent in what they're doing. And we advise our clients. We have about 3 or 4 IRA custodians we like and we work with that we suggest, but there's dozens of them out there. You want to shop around a little bit like anything and do your homework and figure out the best fit for you. But for the most part, you're really not looking at more than $500 a year to self-direct your IRA generally.
Yeah, and I've also seen some self-directed IRA custodians charge based on the number of assets that you hold. So if it's properties, for
Correct.
example, the number of properties that you hold in the account and that sort of thing. In my experience,
Yes.
the simpler the pricing structure is for these, the better, right? You want to be able to look at it at a glance and get it and not pull out your graphing calculator or whatever from high school
Right.
to have to try
Right.
to figure that out.
Exactly. Yeah. Number of assets, number of transactions. So yeah, or you want to just go the flat fee route. It depends how much money you're moving, how many transactions you're doing. Yep.
Yeah, this is not an insignificant amount of money here. You're talking about hundreds of dollars a year. I want to push back on this premise a little bit and hear your thoughts on this. Someone like me, for example, I have about 50% of my assets in stocks and about 50% of my assets in real estate. So I'm going to be owning stocks anyway. Why wouldn't I just own those stocks in a conventional IRA account with my brokerage? Why wouldn't I do that? Like, why should I go out and pay 300, 400, $500 a year to a self-directed IRA custodian to hold my real estate assets if I'm going to be holding stocks anyway?
What I'd suggest, Brian, is keep your stocks, keep your Fidelity account, right? Your Charles Schwab account. A lot of people don't self-direct 100% of their IRA into alternative assets. That's probably not a good investment strategy anyway. You want to be diversified. You want to be in some mutual funds, and the stock market was up, what, 20%, 18% this year, right? So ride the wave. But a lot of people like to take maybe a third to 50% of their IRA. And that's what we suggest our clients do. Don't move all of it. I get people that call me all the time. I want to move my entire IRA into your next deal. I say, whoa, hold the brakes here. Let's diversify. Keep some money in the stock market, keep some money in real estate. And so generally a third to 50% of your IRA gets self-directed into alternative assets. Of course, it's up to you completely. And but keep your account with Fidelity or Charles Schwab and keep riding the stock market and keep that diversification.
Yeah, no, that makes sense. Diversification is one of the core values in our investment club. We are all about spreading money across a lot of different deals and different geographical markets and different time commitments and all that stuff. Yeah, that argument does land well with me of not just diversifying your assets and your portfolio, but also diversifying your tax advantaged assets in a Roth
Mhm.
IRA or traditional. And
Right.
by the way, it is worth mentioning that you can open a Roth self-directed IRA as well. That's
Sure.
a question that I do hear people ask
Yep.
sometimes. All right,
Roth
Aaron,
traditional.
in
Yep.
30 seconds or less, how do you help people and how can people connect with you if they want to take you up on that help?
Sure, Brian. So for the last decade, we've been helping people preserve and grow their wealth in real estate. We're strictly New Jersey focused. We find vintage multifamily property here. We reposition it over time and have large liquidity events for investors through refinance and sale and consistent quarterly cash flow. And we're vertically integrated with an in-house property management company. So we know this market very well. We get great discounted off-market deals. We reposition them with our in-house property management company. And we help investors, accredited investors, build their wealth in real estate here in one of the highest demand markets that's often overlooked by other real estate syndicators. And our website has tons of content as well. I have about 170 podcasts myself on the Passive Cash Flow podcast. And I have some ebooks and so on at peoplescapitalgroup.com. So there's tons of content there for people to learn more about real estate investing and self-directing your IRA. And you can also email me at aaron@peoplescapitalgroup.com. We can connect that way. But yeah, check out our website, peoplescapitalgroup.com.
Awesome. Aaron, we certainly appreciate your time. And unconventional investor, if you got a fresh perspective out of this quick episode, pay it forward. Pass it on to a friend or family member or a colleague who might also get something out of it. And if you didn't get anything out of this episode, email us and tell us why not. Email us at support@sparkrental.com. Let us know what you want to hear more about. And lastly, consider joining our co-investing club and taking your financial journey to the next level. We have a free course all about how to invest passively in real estate. It's at sparkrental.com/free. So check that out and stay weird, unconventional investor. We'll see you next time.